In this video, I'll be going through some of the charts in the latest release of the Reserve Bank of Australia's report on the Australian economy and financial markets, February 2022. You can find this report on their website under Chart Pack, noting that the data has been updated to the 27th of January. Okay, let's get started with Australia's favourite topic: housing. As you can see, in the last year or so, housing prices have gone ballistic, skyrocketing into the stratosphere, making it extremely hard for young Australians to buy their first property, unless of course they get into massive debt. Housing prices and household debt, ratio to household disposable income, noting that household disposable income is after tax, before the deduction of interest payments. We can see a strong correlation between housing prices and debt. Obviously, as housing prices go up, so does debt, and vice versa. Easy money equals inflated house prices. This is pretty easy to explain when you look at interest rates and how they've plummeted over the last decade or more to record lows. However, as house prices go up, for those who are lucky enough to own a house, their net wealth also goes up. High house prices make homeowners feel richer, no matter how fake that might be. Despite owners owning the exact same house, they are apparently richer. Go figure. Business investment has gone down significantly over the last decade. I guess this is somewhat due to business confidence, which has been fairly flat over the last decade, with some understandable turbulence in the last couple of years. The most recent data indicates that business confidence is currently quite low. In December 2021, most retail trades suffered, apart from food retailing, which increased by a modest 2.2%. Household goods, clothing, and department store retail all fell significantly, with department stores falling 21.3%. Share markets around the world have all been booming, which many people find unusual. As they say, there seems to be a disconnect between Wall Street and Main Street. How can it be that food banks and homeless shelters are overwhelmed while the Dow Jones hits all-time highs? It doesn't seem to make sense, does it? Well, it does when you realise that governments around the world have pumped trillions of dollars into the economy, giving people money to spend, which ultimately filters its way into corporate profits. Not to mention that with interest rates so low, investors didn't really have a more lucrative place to park their money. To put it plainly, the stock market is not representative of the whole economy. As American Nobel Prize-winning economist Paul Krugman said, the stock market is about one piece of the economy: corporate profits. And it's not even about the current or near future level of corporate profits. It's about corporate profits over a somewhat longish horizon. In terms of international trade, Australia increasingly exports mostly to China. That pretty much sums up this chart. Despite our ongoing disagreements, Australia needs China. What do we export? I think you all know. Iron ore, coal, and gas. Fossil fuels. I know the environmentalists don't like it, but if it wasn't for fossil fuels, Australia would be stuffed. GDP growth has followed similar trends across the globe, with major fluctuations occurring over the last couple of years. China is still growing, although by less than historical averages. Australia GDP growth is following a similar pattern, but has certainly fallen in the last quarter. Unsurprisingly, Australian state budget balances have been falling over the last few years, as has the Australian government's budget balance, and is expected to continue to fall well into the future. Underemployment and unemployment rates have been falling significantly over the recent months and years. Job vacancies and advertising have increased over the same period. One might think that we don't have enough workers. Well, looking at this chart, we can see that net overseas migration has fallen off a cliff in recent years thanks to international border closures. RBA research shows that overseas workers would ordinarily make up more than 10% of the workforce in hospitality, cleaning, and farming. It should also be noted that working-age population is trending downwards in Australia. People are getting older, but not enough children are being born. Australia's current fertility rate is 1.66 births per woman, which is far short of the 2.1 required to keep the population stable. If there was no immigration, Australia's population would eventually disappear. On that note, that will be the end of this little presentation. I hope you have enjoyed it. There are a lot more charts in the RBA report, so feel free to go investigate them for yourself. Have a nice day.